Now, the price of oil has jumped to its highest level in almost 7 years. That's after the drone attack on an oil refinery in the United Arab Emirates. The price surge threatens to push inflation even higher. And our business editor, Stephen Carroll, is here with more on that. Stephen, just tell us then what on earth has happened to oil prices.
So if we look at the international benchmark for oil, Brent Crude, it's up by more than 10% since the start of this year. On Monday, we saw those prices push even higher, hitting levels not seen since 2014 at over $87 a barrel. Compare that to the start of the pandemic when the price of oil had slumped as low as $20 a barrel. Since then, we saw things pick up as demand returning, as we can see on this graph. In recent months, though, we've seen demand outstripping supply. That's been pushing prices higher in general. We had a peak in October, which actually eased somewhat as the Omicron variant arrived, again caused questions over what sort of demand there'd be for oil. Today on the oil markets, we've got further rises on both the international benchmark and on US oil prices as well. Brent is now trading over $88 a barrel. West Texas Intermediate WTI over $85 a barrel as well. So pretty dramatic price increases.
What's driving the surge then?
The drone attack on those oil trucks in the UAE is kind of the latest issue. It's reminded us of the, I suppose, concerns there can be over prospects of supply, even though that didn't have any impact on this oil supply going onto the market. It gives us just an idea of the vulnerabilities that some of these producers are facing. The UAE is a massive oil producer, so what happens there can have an impact outside, but it comes on top of this broader disparity that we've had between demand and supply since the beginning of the pandemic. When oil prices plunged in April 2020, the cartel of oil producers of OPEC and their allies such as Russia and Kazakhstan agreed to cut output by almost 10 million barrels a day. In July of last year, the group agreed to gradually increase output to bring it back to pre-pandemic levels. So they increase it by 400,000 barrels per day each month. The plan is to restore supply then by by September to what it was before the pandemic. Of course, that's not going to help to ease the problems in the short term. The White House has been calling on producers to do more to increase supply, and actually many of them are struggling to keep up with the current increases they've committed to. So no great prospects for that to increase in the short term anyway. Goldman Sachs, the bank, now projecting that Brent Crude oil prices will hit $100 a barrel in the third quarter of this year.
What about the rest of us then, Stephen? What does it mean for consumers?
It's not good news, unsurprisingly, because higher prices for oil on the markets means higher prices at petrol pumps, higher prices for home heating oil, higher transport costs for businesses. Back in November, the US president had spearheaded an effort to get countries like India, Japan and Britain to release oil from their strategic reserves in a way of trying to ease this crunch on the market. That did have a short-term effect of bringing prices down, but it didn't last. The broader supply problems in the market, I've been saying, aren't going to resolve themselves anytime soon. The International Energy Agency expecting that for 2022 that the supply of oil will be about 1 million barrels a day under what it needs to be to meet the demand. So consumers are likely to see price rises to come anyway, at least in the short term. That's despite efforts being made by countries like Libya or China to increase the supply that's on the market. The bad news, of course, is this is coming at a time when prices are rising in general as well. Energy prices, the biggest driver of inflation. Inflation now at a 40-year high in the US, 20 years in the Eurozone. This means that household budgets could be even further squeezed in the coming weeks and months.
Stephen, thanks very much. Stephen Carroll, our business editor here on France 24.